Hello everyone, Joseph here again. Thank you so much for joining me on another edition of my weekly Forex video. If this is the first time that you're watching this video, I really hope that you find what I do helpful to you, obviously, in your trading. So I've decided to do something different this time around. So instead of just picking a couple of trade setups to show you guys, I'm actually gonna go quickly. I'm gonna go through all my charts. By that I mean all the currency pairs that I trade in my portfolio. So I'm just gonna go through them quickly, and then if there's any trading opportunity, I'm gonna point it out to you guys. Okay, so let's go over to the chart. I think what I'm gonna do today is actually gonna help you guys, some of you guys, to see how I actually do most of my analysis. So as you can see, these are all the currency pairs that I trade in my portfolio. So we're gonna start with the euro because it's at the top, and we're gonna go all the way down to these currency pairs if we have the time. So the first thing I usually do is I look at the currency pair on a higher time frame, usually the 4-hour chart, sometimes the daily, just to kind of get an overall picture of what the market is doing. So as you can see, looking at this chart on a 4-hour chart, on a 4-hour time frame, we can see that the market is in a sideways movement. Like, it doesn't take. I'm not going to try and explain to you what a sideways market is or what a bullish or a bearish market is, because I've already made a video on structure, on how to tell what kind of direction or what kind of structure the market is. So looking at this market, we can see that the market is already in a sideways movement. So the first thing I'm going to be looking for, if I'm going to be trading this pair, I'm going to be looking for advanced patterns. So once I know that the market is in consolidation, my mindset is is straight away set on looking for an advanced pattern. So I'm going to drop this down to the 1-hour time frame and try and see. Actually, I'm going to go all the way down to the 30-minute time frame, because we do have a pattern that has completed on Friday. And it's actually a buy at the open, assuming the market doesn't open with any gaps. So it's actually a bullish Gartley pattern. So we got X to A leg, we get a 618 retracement, and with a bullish Gartley pattern, we're looking for 127 extension of the A to B leg. So we can see that the market has come right into that 127 extension. So this is a buy at the open, assuming with open the market opens with no gaps. There you go. So in terms of targets, the first target has been coming up at the 382 retracement. So let me bring in my target box. So from 107.90s to 108.32, this is about 40 pips on our first target. On our second target is about 70 pips. So this is going to be a very good trading opportunity if the market opens at the current price. So let me just show you where the stop loss is going to go. I have to go over to the higher time frame just to show you guys. So our stops are going to have to go below. Gonna have to go to 108.45. That's where the stop loss is gonna be. Yeah. So we're going over to the next currency pair, which is the pound against the US dollar. Let me put this all the way on a higher time frame. So reading structure, we can see that the market has been completely bearish, but recently on Friday we just had a break and close above previous structure, and by that I mean this: we had a break and close above previous structure. Although the market has retraced back, I still expect this market to go up, simply because of this break. But this is not a trade I would be taking. I mean, for those people that trade head and shoulders, you do have a head and shoulders pattern developing on this trade. We can see we have the left shoulder right here, we got the right the head, and we got the right shoulder, which is completing. For those of you that trade head and shoulders, you'll be looking to buy this market at this price, but your stop loss is going to have to go below this point, which rules me out from taking this trade based on structure, simply because I don't have a favorable risk to reward ratio. So this is not a trade I would be taking. Let's head over to the next currency pair. I do have a short position on the Australian dollar against the US dollar. It was actually a bad pattern that completed on Friday. Let me show you guys. We got the X to A leg, we got a 50% retracement, So if I bring in my triangle, X to A to B, B to C, C to D. So we had the market completed a bad pattern around 107.22s. So I'm already short on this pair, looking for the market to roll all the way back down to the 382 retracement for my first target, which is going to be around 69.62s. So we're gonna wait and see if the market can get there. I mean, you can probably still get involved. I mean, you're only about 20 pips away from the entry point, or you might want to wait for the market to see if it can, you know, go back up to around this point where you'll be looking to take a short position. So I'm gonna go over to the next one, US dollar against the Canada. I don't think I have a trade on this one. There's no trade on this one for me, because the market has been very, very bullish. I know we had this huge retracement on Friday. You know, if you might be looking for a trend continuation running at this point on a daily time frame, but it rules me out because I don't really trade the daily time frame, because my stop loss is gonna have to go below this, and that is way out of my pip range. That's around 200 pips. So I'm staying out of this trade. Next one is the US dollar against the Swiss franc. I think we did have a bearish Gartley pattern setting up on the 4-hour chart. Again, this is out of my trading time frame, so I'm not going to be taking this trade, but I'm going to show you guys. We have a bearish Gartley pattern. You can see the 618 retracement. So let me bring in my triangle, X to A to B, B to C, and C to D. It's going to complete 127 extension. It's gonna be somewhere around there, but let me just bring in my Fibonacci just to confirm that for you guys. 127 extension, you can see coming right there. I don't even have to draw the Fibonacci ratio to know where the 127 extension is. Okay, so that's the dollar against the Swiss franc. Moving on to the next one, dollar against the yen. I did have a bad pattern that ended up, actually was it bad? No, it was a Gartley pattern, I think, that ended up being stopped out on Friday. So let me just try and confirm that. Yeah, I did have a X to A leg. Yeah, 618. It was a Gartley pattern that ended up being stopped out. I think last week generally was a bad week for advanced pattern traders, because most of the patterns ended up breaking. And it happens, guys. I mean, you don't expect to be, every week in the market to be a cakewalk. It doesn't happen that way. Sometimes you're gonna have to, it's a battle to just stay, to keep your head above water. But yeah, we did have a bearish Gartley pattern that ended up being busted out. So in terms of the US dollar against the Japanese yen, let me just put this on a daily time frame and see if there is any trading opportunity. Yeah, well, there might be a trading opportunity simply because we've got this huge structure and the market has come into that structure. So I would expect a little bit of a retracement from this area, but it's not a trade I will be taking on, simply because I'm looking at it on a daily time frame, and I don't trade the daily time frame. And for you guys that are looking for a trend continuation, that might be an area to try and get short. But yeah, I'm staying out of the US dollar and Japanese yen for a while. So moving on to the next one, the pound against the Japanese yen. This is another currency pair where I had a trade that ended up being stopped out again. So yeah, we had what was it? I think it was a bad pattern. Yeah, it was a bad pattern that ended up being stopped out. So let me just show you guys the bad pattern. X to A, A to B, B to C, and C to D. So you can see the market has all closed above X. So I've been stopped out of that trade, and the pattern is completely invalid now. Now we have to move on, wait for the next trading opportunity. Let me put it on a 4-hour time frame and see if there's any trading opportunity. Well, if I'm going to be trading, I'll be looking for a trend continuation, simply because we had the same scenario on the pound against the US dollar. We had a break and close above previous structure. So I expect this market to continue higher, although we might get a little bit of retracement. If we get a retracement back into this level, this is the previous structure. If you get a retracement back into that level, then I'll be looking to buy. because that's going to give me a favorable risk to reward ratio, because my stop loss only has to go below this low, and then my profit target is going to be yeah, if I get long here, that's where my profit target is, that's where my stop loss is going to be. So you can see it's going to give us a nice favorable risk to reward ratio of, you know, just over 1.1, 1.23 to 1. So moving on to the next one, the euro against the yen. Looking at this in a 4-hour chart, so you can see that the market it's come into a little bit of a, I would say, a descending trend line resistance right there. So we would expect this market. So this market, you know, if we look at it on a lower time frame, I would probably be looking for an advanced pattern, because I can see that the market has come into a little bit of a consolidation right here. So I would be looking for an advanced pattern on the euro. So anywhere between this point, I'll be looking for an advanced pattern. Unless it breaks and close above this trend line, then I'll be looking for a trend continuation opportunity. Well, let me actually pop this back over to the daily chart and see if there's anything. Okay, we do have what might look like an advanced pattern. So let me go ahead and do an X to A leg. What did we get here? 50% retracement. So yeah, we do have an advanced pattern. It's a bad pattern. X to A, A to B, B to C, C to D. So we did have an advanced pattern that completed right at 107.63s. So even though the market, you know, on a lower time frame, the market is in a consolidation, the longer time frame we do have a bullish bad pattern. So but yeah, I'll be looking at the market on a lower time frame heading into this week. I'm trying to find an advanced pattern to trade. Moving on to the next one, Aussie dollar against the Japanese yen. So let me put this up on the 4-hour chart. I think this has got a similar scenario with the Aussie dollar against the Japanese yen, where the market has come into a bit of a structure here. So I would be expecting a little bit of a retracement. Although I wouldn't be expecting this market to go higher, simply because we had a break and close above the previous structure right here. So if I get a retracement back into this level, I'll be looking for a buy opportunity. But in the meantime, I'm going to be staying out of this. There's no trade for me there. The second to the last one, Canada against the Japanese yen. This is, I think we would, you know, most of the yen pairs, we do have a similar scenario as most of the yen pairs. I would be looking for a bullish trend continuation for it, simply because on most of the yen pairs we had a break and close above the previous structure. So if this market can come by, if we can get a retracement back into this level, then I'll be looking to go long, because I would have a favorable risk to reward ratio. And last but not the least, Swiss franc against the Japanese yen. I think we do have a similar scenario with the euro yen on this pair. So then put this all on a daily time frame and see. Yeah, I mean the market has come into, I don't think we have any kind of a structure here. I don't think we get, this is a 786. No, okay, it is a 618. We do have a 618 retracement. Okay, so we do have a bullish Gartley pattern on this pair. So A to B leg, we're looking at a 127 extension. So there it is. So the market has it. It's actually going to be a very good Gartley pattern with a very low risk to reward ratio. So if we get more downside movement, it's going to be a very good good trade to look forward to. Okay, so that's it for now, guys. I really hope that the new way of me analyzing this or showing you how I do my analysis on the forex market, is actually a better way than the previous ones. And if it is, then please let me know. And yeah, and as always, you know, if you like this video, then please, you know, like it, share it, or even subscribe, and just do anything that helps really. And I really appreciate it. And until next time, I hope everyone has a better week than the last week of trading, because personally for me it wasn't really a good week, but you know, it happens. So I hope this week is better for everyone else, and in the meantime, just keep it simple, and I'll talk to you soon.